What's up everybody? Welcome to the Stocks channel. My name is Corey and today we did see another volatile day in the stock market, but we did not break any of the critical support levels or lose the bullish trends. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Also, since it's Friday, we will take a look at the bank account and we can see the bank account is down 1.17% this week. And we did finish the month of July, so we can see that the bank account is up 3.02% for the month. Remember, the bank account did start on July 8th, so that is not actually the full month. From here on out, the bank account will now track month to month perfectly because the bank account wasn't created until July 8th. Remember, if you're looking for a trade alert service that only trades TQQQs, Bank Trade Alerts is probably the system you're looking for. It works in all market conditions and it's very simple to follow. You receive all the buy and sell alerts directly via email and text message. I'm running 50% off right now with a coupon code, so now is the best time to try out Bank Trade Alerts. You can find out all of the details in the description below. Alright, so jumping back over to SPY, we did close the day down 0.49% and we did get a price action close below the 5 EMA. We can see a lot of selling pressure above the 5 EMA, but again, we did come out of that bad earnings report from Amazon, which did start dragging the market lower. As long as we are holding above critical support and we still have the bull trend, there's nothing to worry about. It's just another volatile day during earnings season, which is completely normal. Remember, I told you whether earnings is good or bad, you're usually going to get a sell the news event. And in a bull market, that's typically a buying opportunity and a good time to buy good stocks at lower prices. So remember, on SPY, we do have that gap to fill below, just below 436, which is also our critical support level at our 20 simple moving average. So 436 and 435 are the strongest support level on SPY. If we lose that support level, it will be an elevator down of selling, and we're very likely coming all the way down to 430 or lower, and the 50 EMA is just above 428. So below 435, look for a massive wave of selling if we do see a price action close below that level, which could take us back down to the 50 EMA. But overall, this is still a bull market and there's no reason to believe we're going to close below the 20 simple moving average. I just want you to be very cautious if we do close below that level. To the upside, we still have resistance at the previous all-time high at 441. And remember, we never did break and close above that level, so don't look ahead. As far as we know, the market could have already topped out at SPY 441. And I would prefer that you stay cautious, assuming that could be a scenario. Still remain a bull, but if we did top out and we close below critical support, you will know that that was likely the market top and we're due for a correction. So it's always better to be cautious than find out the hard way and be over leveraged at all-time highs and then lose a ton of money during a correction. So watch critical support at 435 and critical resistance at 441. If we do break above 441, you're looking for the next price target above at 446. And that will be an air pocket of very little resistance, so we could get there in a hurry if we do start to break out. We had a week of consolidation where we basically went nowhere, going sideways this week, which does mean the next breakout should be a very powerful move, and it could be a breakout to the upside or a breakout to the downside, so watch those critical levels closely. On the triple Qs, we were down just a little over 0.5% today, and we did close just below the 5 EMA. We did bounce off critical support, which is always a great sign, which is that 20 simple moving average of support, just above 362. So watch critical support on the triple Qs at 362 with critical resistance just above at 367. Above 367, we could easily get to our next price target at 370, but remember, we need to close above that level and we do need to see a confirmation breakout. Below the critical support at 362, we will have support at 360 and 358. And if we start breaking below 358, it's very likely we're coming back down to the 50 EMA, which is going to be at 352. Overall, the triple Q still have the bullish trend and the price action did bounce off critical support. So that is a bullish price action bounce for the weekend. And we do still have a strong bull trend. So there's no reason to believe that the bulls are going to give up now. Remember, bull markets do not die easily. And we continue to see people buying the dip. Even after bad earnings, we still see bulls stepping in and buying up the dip. On the Dow Jones, we were down 0.38% today, and we continue to see the Dow Jones getting rejected at that 351 resistance. Again, this could be another warning sign that the market is selling off at these strong resistance levels, and that's why I always tell you to not look ahead. We have not closed above 351 except for one time, and you need 2 price action closes above that level. If we do get another price action close above 351, the next price target will be 355, but for now, you have to respect that resistance. We still have a bull trend, so there's no reason to think that we can't break through that level soon. But right now, you have to respect the fact that sellers are coming in at that level. The critical support on the Dow is still down here at 348, with the gap close at 346 and the 50 EMA at 345. On the Russell 2000, we still have a bear market, but we are starting to lose the bear trend. The 5 EMA did cross back above the 13 EMA, and the price action did close right on top of that 20 simple moving average. We're still seeing a ton of sellers above the 50 EMA, which I did tell you to expect because the Russell 2000 was in a bear market, and we will see a lot of short sellers at resistance. So we still can't really get a price action close above 222, so you still need to watch that resistance level closely. The 50 EMA is still at 223, and we need to see IWM closing above about 224 to start scaring away the bears. We are starting to lose the bear trend, but overall the price action is still bearish until we can get back over this 50 EMA. So critical resistance will be at 222 and 223, and critical support will be at 219 and 215. On the ARKK ETF, we were down 1.32% and we closed right on top of critical support at 120. We don't have a bear trend or a bull trend, and the price action is currently sitting at critical support. So we'll learn a lot going into next week, and we did see a lot of selling pressure above that resistance level at 122. So critical resistance is 122, and we need to break out above that level to start running to 128. If we break below the critical support at 120, look for potential support at 118 and 116, and below 116 we're likely coming back down to 112, and we will be looking a lot more bearish if we close below 120. Remember, it's likely we finished up a correction and we're going back into a bull cycle, but we need to see a close above about 122 to confirm that that is the case. On the VIX, we continue to see elevated fear with the volatility, with the VIX going up 2.94% today, and we are seeing the VIX starting to develop a bullish trend. We see higher lows, and we're very close to seeing the 20 simple moving average crossing back above the 50 EMA. So if we don't see the VIX getting crushed back down into the low 16s very soon, we could see another volatile wave of selling. So right now the VIX is really set up to go into a stock market correction if we do start to see the VIX spiking above 20 and closing above about 24. However, if we don't see the VIX getting above 20 and we see it getting crushed lower, that will tell us to expect brand new all-time highs. So as you can tell with the VIX, it's currently sitting right on top of that support level at 18.2, and it's ready to go either direction, so you will need to watch this very closely going into next week. On Bitcoin, we're currently up 3.5%, and we are seeing Bitcoin breaking out above that critical resistance level at 41,000. Again, this is a bullish breakout, and we are seeing this happening on increasing volume, so this does look like the real deal. We still need to see Bitcoin eventually pull back and retest the breakout level at 36,000, and if that level does hold up as support, that could be the next best buying opportunity. We still need to wait for the 20 simple moving average to cross back above the 50 EMA to confirm the bull trend, and the next resistance level is just above at 43,000. So right now, watch support at 39,000, but the strongest support will be 36,000. So critical support will be down here at 36,000 with critical resistance at 43,000. But overall, you cannot look at this chart and think this is not an impulsive rally off of critical support. I've been saying this for a while, that if you're a Bitcoin bull, you want to accumulate at these support levels. And right now, this is not the time to be chasing Bitcoin if you were not buying at support. So wait for the pullback and wait for the confirmation of the support level to hold up, and that will be your next best buying opportunity. On Amazon stock, we did drop 7.56% today, and again, this is because of that earnings report. We were starting to consolidate in a wedge, and normally you will see a big breakout in the upward or the downward direction after consolidation. Well, the earnings report did come out, and we did see worse than expected results, and we are seeing Amazon paying the price. We saw a huge gap down, which did open an enormous gap that won't close until we get back up to about 35.81. Now, typically gaps get filled, but there's no guarantee how long it's going to take. We still see Amazon holding that critical support level down here right around 33.10, and if we lose that level, we could be coming all the way back down to 31.85. Now, overall, this is still a blue chip company, and I don't expect to see Amazon staying beaten up for too long. We still have the 50 EMA of resistance up here at 34.90, and that will also be our critical resistance at 3,500. If we can get back over the 50 EMA, I would look for this gap to get filled, but if we continue to lose support and we come back down to 31.85, it could take a lot longer to fill this gap, so you still need to remain cautious. But overall, if we can stay above about 31.90, we could still get up to these price targets in the 3,800s and higher, but it will take a lot longer than expected due to the bad earnings. So in this stock, you need to be patient and don't try to catch a falling knife. Eventually, this will be a great buying opportunity, but we need to see where it finds support first. On Tesla stock, we had another bullish day today, going up 1.45%, and we see Tesla finding resistance exactly where we would expect to find it at 692. Remember, we did get the bullish breakout above 658, and we did see follow through with today's price action, and we're currently trading at the top of the upper Bollinger Band. We're building up the bullish trend, and we did regain the full bull trend today with price action well above the 5 EMA. So it's safe to say on increasing volume that Tesla is looking bullish, and it does look like it wants to start running. So wait for Tesla to break above 692, and we should be able to get to 715 in a flash, and above that we should start running into the 760s. Remember that Tesla has been lagging this bull market for quite some time, and it's been consolidating going all the way back to June. So this breakout could be the real deal, and wait for that confirmation breakout above 692. It's still possible we see a pullback back into the 680s and 670s before we find support and start bouncing higher. But overall, Tesla is looking bullish, and it just needs to stay above about 660 to maintain the bullish trend. So look for that potential breakout and bull run in Tesla going into next week. On Apple stock, we were up 0.15% today, and we are seeing Apple starting to stabilize after it did get selling after earnings. Remember, Apple's earnings was very good, but it was still a sell the news event, which is completely normal. Price action is still above the 20 simple moving average, and we're still closing above critical support, which is right there at 145. We need to see Apple breaking back above 148 and then 149 to get to our next price target at 156. And as long as we have the bullish trend with price action holding over critical support, there's no reason to believe that Apple is not heading up to 156. So right now we see Apple in a consolidation wedge, so look for that confirmation breakout above 148 or the breakdown below 143 to tell us where Apple's going next. If Apple breaks below support at 143, we have support at the 50 EMA at 139 and the gap close at 137. On the financial sector, we were down 0.79% today, and we do see the financial sector still closing above all the moving averages, and we're very close to breaking out and setting a direction in the financials. Right now, the price action is telling us to look for a potential break to the upside, and we're very close to having the bull trend yet again. The industrial sector was down 0.19% today with price action still over the 5 EMA, and we still have the full bull trend. The healthcare sector was up 0.09% today with price action still over the 5 EMA, and we still have the full bull trend, and it's still a very strong bull trend. The energy sector was down 1.59% today, and we still see the bear market in the energy sector. Price action is back below all the moving averages, and we still have a full bear trend. So jumping back over to the S&P 500, we can definitely see that there's still strength in this market, and these bull markets do not die easily. If we are seeing SPY topping out at 441 and we're starting to roll over, we'll know with the confirmation breakdown below support at 435. So don't make any guesses, be objective and follow the price action in the trend. And right now, we still have bullish price action with a bullish trend. Could we be rolling over? Possibly, but we don't want to make any guesses, and we want to wait for the objective technical trend to end. Remember, if you've been in this bull market for a while now, you should be up huge on your position, and there's no reason to let the fear shake you out of your position if we're potentially going higher. So obviously do what's right for you and your risk tolerance, but overall I can't stress it enough to block out the noise and stay objective, because this is still a bull market and we could still be going higher. Also, don't forget I have my trade alert service that only trades TQQQs called BANC Trade Alerts, and it's very simple to follow. All you need to do is execute the trades yourself, and you'll receive all the buy and sell alerts directly via email and text message. I'm currently running a 50% off promo code for your first month, so now is the best time to try BANC Trade Alerts. I also have the Stocks Channel Discord where I do intraday updates and analysis to always help you navigate this market and stay on the right side of the trade. You can find out how to join the Stocks Channel Trading Discord community by clicking on the links below. So happy Friday, and thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.